So I asked my premium guys, when you look at this, what do you see? With these spinning tops, small bodies, after the sell-off, after this break triggering event sell-off that took out the low 3. And when you bear in mind you got that bear flag rally after you took out the low 2, and when you bear in mind that we feigned and broke through the key level low just to make the headlines, that would have prompted the support and resistance traders into the losing trade, selling short on a new low, and then you gave it a rally. But now you have these spinning tops. Let's pull this through so that you can see it in greater scale. Such low volatility, spinning tops, and eventually later today you're getting the push through down, and we just rolled into the new morning with a little bit of a rally. How do you see this playing out? These low volatility tight bodies, how does it typically end? Our scenario that we took for what may be the case, highly speculative, because we only had just the early bit of the draw, but there was a tendency to hang and grind along these levels, so we went for the top side rising wedge line. At that juncture we just had one low point, suspicion being that you would have a sell-off at some point round about these levels here. So as you can see, the blue levels roughly there, we were looking for a dip a little bit higher, in and around, and I can barely read it, 6,040s odd for the lows, before rallying and squeezing. The rising wedge looks like the structure that this will continue. So our on balance of probability bias is to continuation, and the wedge looks like the more likely version of it. But this is just a scenario cost. It's one option of many, but it just seems to have a reasonable probability of happening, and this would create or set up the final triggering sell-off that we all see occurring, OBP, out of this very low spinning top period. Bit of playing on the borderline after putting a toe through, and my suspicion is there is a distinct possibility that we could get to a real impulsive part. If this inverted is really to take form, and that's not to say it has to and it will, but if it is to, there should be a highly capitulative sell that would run us to our second interim, which is sub 4K. That's right, upper 3900s. When you bear in mind we are still north of 6,000 here, that would be a $2,000 plus sell-off, which would be pretty spectacular, bearing in mind at 6 it's a 33 and a third percent devaluation. Anyway, let's have a look at a couple of other things within all of this. That's what's happened, by the way, on our rising wedge scenario, and it did get largely down to the 6,040, and it has been hammering on this level. So maybe this wedge draw is good, we'll see. Will we get that rally up there in the squeezing? We'll see. That's the scenario cost as price behavior futurists. That's the game. What comes next? Look at the probabilities and the likely options. We will see if this one turns out to be accurate. But this is something else I want to show you. These are the longs. Now this is quite remarkable. The longs are climbing. That's right, climbing after and during and up to the sell-off period. So here are people doing what I call the Dunkirk defense, on the basis that this is the absolute lows. In other words, because you traded this as an absolute low over here, this all has to be support zones. And it's one of the reasons why I suspect we did get this bear flag rally after running the relative low 2 and starting to approach a relative low 1, and also after stepping through it, that there was some buying over here. That's another reason why we could capitulate quite strongly, because a lot of the last stand bulls will have occurred in and around this low 3, the low 2, and the low 1 area, on the basis that these were foundational lows, in other words, stakes in the ground. I'm afraid that is a flawed analysis on balance of probabilities for me, and that'll leave a lot of hollow, open territory to capitulate in, were we to get a real attack on the sell side, and that could see us take and run the 4K mark before we would pull back and have some form of bid reassembling as people move to the other side of the channel to defend Blighty and Liberty. Yep. So let's look at the shorts and the longs. So those longs were highlighted were climbing up. In fact, what was the number we got there? Let's put it on there. 32,000 looks like the number. And I want to show you on this one. These are the shorts, by the way. So the shorts are at 24,000. So the shorts and the longs have expanded apart, but the shorts actually stepping back quite a large degree in spite of that. During this period that the shorts have actually fallen away, if we look at the shorts over here to where they are now, they've actually got less, they've shortened. The longs have actually escalated and have actually accelerated. In other words, the dip buying is in full swing. However, Bitcoin in the orange here has lost value during that period from here down to here. So there's a divergence, Bitcoin trading down, the longs getting ever more leveraged and trying to hold the line. That sets up some great capitulation, and the shorts are no longer near extreme highs. So once again, for me, this is laying fertile soil for a capitulative sell move. Could be wrong, but in my assessment. We also then take a look at Ethereum, which is the second biggest. The alts have actually been leading indicators. In other words, people have got out of alts first, and Ethereum is number 2. It's not a minor alt, but people have tended to get out of the top 5 or even the top 10 alts into Bitcoin and fiat, often with Bitcoin being an interim step. So this has given temporary support. So when people are cautious about the asset class, they move out of, say, the likes of a Bitcoin Cash, a Ripple, an Ethereum, an EOS, etc., any of the top 5 or the top 10. And some of that money ends up in Bitcoin. So Bitcoin is often the last to roll when people are retreating. And you can see that Ethereum is close to actually running a new low, while Bitcoin is still far more higher slung yet. It hasn't dipped, but it may come later, and that could pull the higher beta alts down with it. So that's my take. Flicking through some of the charts. No tears about YouTube spammer Ziliqua getting its just deserves, spilling out the low of its falling wedge. No sign of buoyancy returning. As I've said, anyone as a business that's comfortable with having people doing that spam get rich quick marketing, I don't think have real moral principle. Whether there's any technology behind it or not is a different story, but they certainly don't have integrity in my book. And for those that think that your BTC can't roll into and that this line absolutely has to defend it, and there's some sort of moment of truth that occurred here in February that simply can't be run, I have highlighted one or two other fairly decent semi-serious coins. There's proper developers behind NEM, and you can see how it has actually gone lower than its low. It's part of that alt move. So look at those spinning tops near the low and then dip down. It hasn't gone capitulatively, but it probably will if Bitcoin does. And that's going to take it back a whole way prior to the lows of the major run-up. And in fact, it could take it below right the way part of the year. Well, I don't know, it's actually gone quite a long way back. It could take it back to way back then in 2017 May. So a lot of the benefits gained during this period could all be in give back mode. So that's NEM, new economy. Anyway, so a couple of thoughts for you to contemplate. My take, very bearish, but a few more rolls of the dice. So this scenario cast is still live over here, the dip. So a kind of rally. It could be a pump in at first and then a drift up and then another drift down, a bit of squeezing, marginally higher highs, tighter squeeze along the bottom as the buyers punch themselves up buying the dips, thinking this time we will win this defense line, this time we will win the war on the Dunkirk beaches, only for them to get the real hard slap in the face. That is my scenario for now on balance of probabilities. I could be wrong. If we squeeze like this, there's also scope for a big melt up and maybe continuation to the upside, although generally these are lower probability. Often you get a little pop out the top before you spill, but it can just go straight into the spill. If the scenario keeps walking, that's what I anticipate. Okay, so learn how to play defense. It's not what you make, it's what you keep. And we're doing the webinar on July the 3rd. It's free, but for the serious only. There will be an offer at the end of it for community. We've had some great feedback from clients, many of them saying thank you so much that we put them on the short side, or at least kept them out of cryptos, riding the downside, and that just not taking the losses in the loan has saved them a small bundle. And many others have actually made some great profits on the shorting. So find out more how you can play great defense with that free webinar. And as I say, there'll be an offer at the end of that for the series. Okay, thanks very much for watching. And if you enjoyed, please share and like. Bye for now.